I got my BMW bro in the house today. You're a car guy. You like cars, don't you? I like cars. You like cars.
I do like cars. Yep.
You were telling me something happened. What happened?
It looks like there was a sell stop on all BMWs over the weekend. So
if you have a BMW, comment below. Actually, if you have a Mercedes-Benz, comment with like a ha 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 below. No, I'm just kidding. So I've got James Tyrell here, JT Money, yes. JT Lender.
Yes.
We got luxury in the background here. We're in South Florida. It's a luxury lifestyle. It's not like a normal market. Let me know if you'd agree with that statement. But we're not all about luxury here, right? It's a lifestyle. Like we are active enthusiasts.
Oh, absolutely. I mean, that's the South Florida lifestyle. I certainly lived that for many, many years.
Yeah.
It's great.
We all have, right? Where we go back and we look at our like Facebook statuses from like 10 years ago.
Oh, yeah.
We're like, cringe.
10 years ago.
Myself included. I love all kinds of cool stuff like luxury properties and yachts and supercars. But that's not the climate that we're in right now. We're in a different climate, and that's okay. But we're going to take it back a little bit, and it's a different time. How long have you been doing mortgages?
So I got into the business in 2002.
2002.
Yep.
Again, different climate. But why did you get into the industry, or what drove you to the industry?
So I was a financial advisor, and that industry was extremely difficult. We were making 600-700 phone calls a day.
Rookie numbers.
Rookie
numbers.
And that was. It wasn't for me. So I had a friend that was got into the mortgage industry. Said, hey man, come over here and we'll give you a stack of leads and you'll call these leads instead. Yeah. So got into it that way. It was awesome. I remember my first day like it was yesterday, honestly.
That's cool.
Yeah.
Man, that's awesome. So you got in the industry for money. Are you still in the industry for money, or have things changed?
Oh my gosh, no.
Changed a lot, right? It's so fun to set you up. And we are in a place of business, so I do say this from time to time. We're not in a home. We're not in a back room right now. We are in an office. We're in a closing table right now. People are walking by. You can visit us if you'd like. If you're in the real estate industry, we can get you in the hot seat here. But humble, hungry, smart,
absolutely.
Faith, family, fairway, all kinds of things that we people over profit, things that we throw out there. So explain to me how things changed over the years.
Well, I mean, at 24 years old, getting into the industry, the goals were to make money. It wasn't necessarily to help clients. It was a huge refinance market at the time. So we did a lot of paper refinance.
Kind of like now.
Yeah.
A little bit like now.
Oh, well, the market that we're actually starting to shift into here looks like we're going to get a dip in rates and get some refinances going. But anyways, so back then it was a huge refinance market. I remember probably for the first 5 years, I didn't go after one realtor. I didn't work with any realtor specifically. I mean, it was leads and refinances, and if a purchase came in, we did a purchase. But It was all refis.
Yeah. Well, people were like knocking doors to do like foreclosures, like get people out of their homes and all that. So totally different market. But absolutely. That market's kind of coming back from the perspective of the equity that people have in their homes and how they can get the money out of that.
Absolutely.
And other things. So
also consolidate some of that higher credit card debt, because we're seeing a lot of that in the market right now as well.
That's true. Yeah. That's something that people don't really think about. You do have kind of a limit that you can have there with credit. You can only go so far, and it can be upside down or low credit scores. But if you want to have property, or you want to own property or invest in property, you got to fix that. So you can't have like high debt to income ratio.
Absolutely.
You got to fix these things.
That's what we're here for. That's what I'm here for, to kind of coach you through that. I mean, if you're starting to accumulate the debt, that's going to lower your credit score. Yeah. And then we're going to we want to nip it in the bud before that actually happens, especially with the equity. But that's a conversation for another video or a different day. Actually,
it is, and we definitely will dive into that, because people need to understand this stuff, and it's not the end of the world if you have debt. There's good debt, there's bad debt.
Absolutely.
People just need to be educated. I think that's the funniest thing about money is we don't talk about it.
No, we don't.
We should educate ourselves, educate each other on that. So, all right, so we're ending summertime. We're moving into fall. I'm sure you've been doing deals. You've been connecting with real estate partners. Is there anybody that you want to give a shout out to? I like names. This is where we call people out. I keep seeing this house go by. It was $25 million, and then my friend Jonathan Frank from the Auto Toy Store shows up in his yacht on the way to Tortuga. Now it's $30 million. And then my buddy, who he sat right here, Terrence, he had been to this house. It was sitting at $40 million.
It's going up?
Yeah, and I had someone else sitting here the other day, and it shows $50 $50 million house that's available. So be careful with the clickbaiters and all of that out there, because I keep seeing this number going up and up and up. You saw it there first, it's 20 million. Now you see some realtors that are like, hey, 50 million. I almost feel like they're printing money here. Yes, in East Fort Lauderdale. Wow. Beautiful home. I hear the property owner is an exceptional person. So shout out if you know the property owner. I actually heard he is like a come as you are kind of guy, open doors. So, that's a really nice thing this day and age, especially with the topics that we're talking about. So that's kind of a perfect segue, because there are a ton of really good professionals here in this marketplace. Who would you shout out by name? Put their name out there so they can hear it.
Shout out by name. So real quick, today actually it's a good friend of mine, Michael Wisniewski's birthday. I'm shooting this video today, so I'll give Michael a big shout out. And my realtors, the guys that I work with, John Paul, Neil, Jason Zigander, Chris Van Gool. Those are three great guys that I work with a lot. And really though, my B&I pinnacle. Just the whole chapter itself. We've got 30 plus professionals that show up every week, like-minded professionals, and we're really there to help each other.
That's really
Shout out to all B&I Pinnacle.
That's awesome. Let me know if you're in a B&I. If you're one of those people out there, you just heard your shout out. Let's get you in the hot seat. We'll have you come in here. You could sit with me, or you could sit with JT, and we'll get some awesome content for you. So we want you to know you're real estate professionals. This is absolutely complimentary. We're not a marketing company. We're a mortgage firm. Yeah. So we're looking to help people. All right. So if you're in the real estate wheelhouse, come out here.
We'll help grow the group.
Let's go. Keep it going. Keep it growing.
Yeah.
All right, so we're going to keep this rolling. So what are the hot products out there? Not a bunch of them. We're looking for, give me one product, lean into it just a little bit, explain why that product is being talked about or hot right now.
I got to go with two real quick, just because the hometown heroes, everybody's talking about it. There's still funding left for it.
How much?
And I don't know, less than 20 million. Yeah, a little less than 20 million at this point.
Well, if you want, we have a $20 million house here. You can use all of the hotel. No, you can't. That's not how it works. That's going to work. Not how it works. I'm a marketing director. He's the mortgage advisor. But Hometown Heroes is a fantastic program.
That's the one that we're all talking about, and that's for your first time home buyers, right? And that's where it goes back to what we're really here to do, and how like my mission statement and from 24-year-old James Tyrell to 47-year-old James Tyrell totally changed. So the first-time homebuyer program is great. And then the other one that I would say that's coming up because of the dip in rates that we've had lately is your bank statement refinance loan. So what's happening is a lot of people, because as we mentioned, there is the credit card debt is starting to mount for people, but you also have a lot of equity in your property, right?
For sure.
So what you want to do is take advantage of that equity, whether it's either refinancing your first loan, doing a cash out, possibly looking at a second, a HELOC second, something like that, in order to consolidate your debt. There's those loans. So that seems to be the bank statement, either first or second. We actually have investors that do just second. So it's really cool. Those are the two right now.
That's exciting. Yeah, we'll delve into more. And I learned so much just from watching all these videos and listening to the real estate professionals and mortgage advisors. But yeah, there's even so much. People have so much equity in their homes that they're kind of in a position right now that they can use the equity to create investment. They can use the equity to buy one or two more homes.
Yes.
That's pretty incredible. So if you can afford it, obviously there's a lot of caveats to that, a lot of things that I didn't really throw into the mix there. When you're saying you could have a third or a fourth property, could get expensive, but if you can afford it, do it, right? Now's the time. Yep. All right, so we're rounding the corner. I appreciate you sharing all this stuff with me. I'm positive people are taking a ton of insight from this, but now it's time. You get the floor. You're going to get either the why, give us your why, a mic drop moment, or leave us with a piece of advice for an industry,
I think this is kind of all three, but you asked me that question earlier, and I said, and here's the truth. Whenever people are questioning, should I buy? I don't know. I'm going to kick the can down there. Let's wait. It's never the right time. In the last 15 years, I do not know one loan that I have written for somebody that is a primary residence that they are disappointed or they are not happy that they purchased that property. The investment absolutely went up in value. Purchasing a primary residence always makes sense if you're renting.
Mic drop moment. Let's go. Now I can't. I know supercars. I know yachts. I don't know. In the 15 years I've been doing it, I don't know one person that bought a supercar was like, man, I just absolutely. I don't regret this at all.
Investment.
Oh, that yacht.
That yacht was not a great investment. That wasn't. But buying a house, buying a primary residence that you can homestead, that is your homesteaded property, you're gonna make money.
Oh, I spoke to people that they were like, "This is my supercar. Like that was my first house."
Yeah.
I got to 3 or 4, and boy, it was like, So if you're listening out there and you're getting excited, or you haven't invested in property, you want to get your first time home, hit up JT.
Yeah, you have James questions. Tyrell. What do I qualify for? Is it the right time?
Does it cost any money? Does it cost any money to find out if you can?
No, not at all.
No, it's free, right?
Yeah, of course.
Free. Let's go. Free. One of my favorite F words. Free.
Yeah.
All right.
Let's just have a conversation.
Yeah.
Come into the office.
Yeah. Well, we had a good conversation.
Awesome, man.
I appreciate it, buddy.
Absolutely.
Let's get back to work.
Appreciate you.